A new survey out this morning from Just Capital on what Americans want companies to prioritize. And Leslie Picker joins us with the findings. Good morning.
Hey, good morning, Andrew. Well, the answer is workers. And in the current environment, it makes sense that Americans are prioritizing how corporations treat employees. Inflation is burning a hole in many people's bank accounts. Union activities have been on the rise nationally, and the workplace has undergone major change during the pandemic and is continuing to evolve afterward. And so Just Capital released a survey showing that worker issues remain front and center. Thousands of respondents spanning age, income level, political affiliation, race, and gender ranked various stakeholder issues based on what they believe to be the most important for business practices. Well, the results show that at the top, paying a fair living wage, that was followed by creating jobs in the U.S. and ethical leadership. Worker-related issues, though, rounded out the rest of the top 6 priorities from the survey as well, including protecting worker health and safety, supporting workforce retention and training, and providing benefits and work-life balance. Fair wages is the most prioritized issue over the last 4 years that Just Capital has conducted such a survey, but 3/4 of respondents said it was an even more important issue this year than last year even, guys.
Okay, Leslie Picker, thank you for that report. We're going to talk a lot more about these new findings and want to bring in the CEO of Just Capital, Martin Whittaker. Good morning to you. We've been talking about these new stats and maybe how CEOs should think about them. I just want to throw into the mix how you look, and we've been talking about this company because it's been in the news a lot recently, how you would look at a company like Starbucks and how something like that would rank or rate in this context, given the sort of push-pull of what we're seeing from labor on wages and so many of the other issues.
Well, good morning, Andrew. Thanks for having us on. Starbucks actually does pretty well. And if you look across the retail space and companies with lots of frontline employees, hourly wage workers, a lot of the issues in the top 6 that Leslie just identified are very relevant for them. I mean, I saw your interview with Howard Schultz recently. I think this issue that you brought up about how companies are addressing workers' needs is only going to intensify. And so our survey shows that. It's not surprising, given the inflationary environment, given who suffers most, typically, when prices rise. People are worried about their jobs. But it's an expectation, I think, that companies should do more. I don't think there's a single answer to that. I don't know what the answer to what Starbucks specifically should do. But when you look at the top 6 issues and you look at what best practice looks like, which we've done in our rankings for companies, right. You start to get some real answers. And I think expectations for companies to invest in workers are only going to rise.
So, but Martin, here's the question. Shareholders typically, at least for as long as I can remember, have been relatively anti-union for the most part. They've been relatively anti-increasing wages, right? Because wages out of an employee's pocket historically has been wages or money out of the shareholder's pocket. It has been seen as a zero-sum game. And the question is whether that has been a completely wrong view, whether it's a right view, whether something has changed. What do you think?
Well, our data does not support that thesis, that it's a zero-sum game. If you look at the Just 100 going back over 3.5 years of trading, it's beaten the Russell benchmark by 7.5%. Our broad-based index, which is sector neutral, in which workers' issues are really the most sort of important criteria, that's beaten the Russell in 6 years of trading by about 7.5%. So we've got a very strong shareholder case. Our data seems to suggest that investors are leaving money on the table by not looking at how companies are investing in human capital and treating their workers. So I reject that thesis. I also think the other interesting thing, which I hope you picked up on in the data, is Americans are united here. This is not Republicans versus Democrats or any other sort of demographic cut. majority of Americans in the high 80s, low 90s, this has been consistent on a lot of issues, agree companies should be doing this. And why? Because it's good for business. That's why. And this is, I think, an ethos of American business that you see, early on in the 50s and the 60s. Jeff Sonnenfeld had a great piece in The Economist yesterday, which talked about that.